Good morning, everyone. Welcome to this live intraday strategy webinar. Today is Wednesday, August 10th. Michael Boutros here with you. Good morning to everyone in the room. Adam, Aurelian's back in the house. DJ, Graham, Jim, Kelly, Mark. Not going to get through you all, but welcome to the room here. So, an unexpected acceleration in the dollar decline that we're seeing here today. Lots of things to cover. We obviously want to touch base and thoroughly go over the Kiwi levels. Look, I was just speaking with Jamie. I'm sure you might have seen his tweet. It's kind of surprising to see Kiwi rip right now ahead of the RBNZ later today. We'll go over those scenarios, what the markets are expecting. It could very well still just be a washout. We'll go over those scenarios. Euro dollar rallied through the top side targets, now hitting that last target, or the second to last target we noted last night. Aussie still ripping higher. Pound yen sitting at support, still looking for a possible dip lower there for possible entries on the long side. And dollar CAD with a complete collapse, but now is testing near-term structural support, so we'll touch on that as well. Obviously, we'll review very quickly the gold and crude trades. Gold coming in some near-term resistance. Crude kind of dilly-dallying here near the highs for the week. And if you have any further questions, trade setups you want to go over, feel free to jump on the message board here. Ruth says, why did the dollar go down? So Ruth, I'm going to try to avoid questions like that because I was going to give you a smart ass answer, which is because there are more sellers than buyers. But we don't want to always necessarily assign a fundamental reasoning or trigger for the decline, okay? As we say always, we're guided strictly by price action. And looking at the chart right here, let's jump into the dollar, Ruth, since you're asking. You saw a pronounced turnover in momentum as we continue to make higher highs in price. The oscillator failing to make higher highs, then holding 70s resistance. On a move like this, again, there was no fundamental catalyst. I was searching through, some of the headlines earlier today, Ruth, so I wouldn't necessarily have to assign it happened because of this. Price action was at resistance. Yesterday, you closed an outside day reversal off of resistance. And as we noted earlier in the week, our bearish invalidation level was up here. So as long as price is below this level, it's vulnerable for further weakness. And yesterday's engulfing candle here, this outside day reversal, can oftentimes be a tell for exhaustion. So Ruth, just let me break it down. I know you're newer to the room. An outside day reversal simply means that the candle took out the previous day's highs and the previous day's lows. When this happens at a monthly high, at an opening range high, that tends to be a very telling scenario. Now, the implications for the Aussie and the Euro were actually well received, right? We were looking higher in both of those. The Kiwi, for me, was the real surprise, and we'll go over that in just a moment. But Ruth, does that make sense? We don't always have to wait and kind of assign some sort of headline or news stream for why it turned over. Price action was suffice. That's all we need, right? And at the end of the day, Ruth, we were talking about this yesterday. Remember weekly opening ranges? Right here, this is an objective break of the weekly opening range. Here's your weekly open. You set a low, you kind of climbed into new highs. As soon as you broke back below the low, even if you didn't get that break, obviously that's a hard trade to get into. But once you've cleared the opening range low for the week, then you came back and tested it as resistance. That's all the tell that you need, okay? The final barrier for me, or kind of a major tell for how this accelerated as well, Ruth, was a break below the monthly open right here in purple. Not only did we break the monthly open, but we came back and tested it as resistance, moved off. Okay, so look for these things in price action to validate what you're looking for. Oh, I don't know if the weekly opening range broke yet. I'm not really sure. Wait, look for the market to offer some resistance at that same level. Okay, great. Second touch. Okay, great. Now I'm ready to jump in. Boom. I missed the break below the monthly opening rate or the monthly open. Let's see. When the market comes back, are we going to find some resistance there? Boom. Instantly, market turns. So these are all indications in near-term price action that you want to be paying attention to that can oftentimes tell you whether this is a legit break and continuation or if it's just a fake out. Okay? Ruth says, all right, cool. Good question. I don't mean to pick on you. I know it's a very, very popular question. A lot of people ask, and whenever there's a sudden move, what triggered it, right? It's not always going to be something fundamental. Oftentimes, the fundamentals will be that trigger, but it's not necessarily limited to only fundamental catalysts. Okay, so here's the performance of the US dollar heading into the US Open. You can see that it's weaker against all its major counterparts. Everything rallied versus the dollar yesterday. Kiwi actually turned out being the biggest winner, up 1.24%. We'll go over that trade in just a moment. Aussie with a nice gain of 1%. This is coming in some uncharted territory here. Dollar CAD ripped 0.87%. With dollar CAD really moving much, much lower into structural support, though, so I wouldn't start to chase Loonie just yet. And sterling with a gain of 0.55. An interesting setup in Swissy, which also looks like it may have broke a near-term upside slope. We'll jump into that in a moment, but it's the smallest mover, guys, so I don't really want to focus on the Swissy. I'd rather have my play on the euro, which has been performing a little better and continues to act it's within very, very clean technical formations there. Okay, ahead of the U.S. market, does look like we are poised to open higher. This is what current equity markets look like in Europe. You're still pretty much flat in the CAC 40. DAX is down fractionally about 0.2%. But ahead of the U.S. market, equity futures are pointing higher for U.S. trade. Okay, so for dollar price action, near-term support, again, you might find something here at 11,900, that 50% retracement. I really wouldn't stress that at this point. The risk really remains for a drop into structural support for this upside slope here, which coincides very nicely now with basically the monthly lows. The monthly low comes in exactly at 11,881. Okay, so still some further downside pressure here possible for the dollar index. Your bearish invalidation level now is just right back at the monthly open. As long as we stay below the monthly open, guys, I really do not want to, or you're basically looking lower still in the dollar index. So I was talking with Eileen here ahead of the open of the webinar, and this is one of the only reasons I'm a little hesitant here to start chasing it. Again, it's been a real strong downside stretch. You had the very nice, precursors here of a reversal, but momentum is coming right into 40. And again, that 50 line coincides with the outside day that you made here on Brexit. The close of that session is basically where you're coming into now. So you might find some support in this region near term to rebound, but broadly still looking lower in the dollar. And if you bring this into a close, a line chart, which is only going to highlight the market close, you can see yesterday's or this week's reversal off the median line. Contentious, but you could still work with that. Any questions on the dollar index before we move off? And we'll be trying to look to see if we can find some structure to the decline, give this thing some guidance, but as of right now, I'm still just treating it as a breakdown, looking for structural support. All right, so let's jump into yesterday's report and obviously the preview for tonight's RB&Z interest rate decision. It's going to be an interesting print. The expectations are all over the place. So everyone's expecting a cut. Here's what the overnight index swaps look like last night. And this is simply, again, just a gauge of what the market is pricing in as far as expectations for interest rates moving into the rate decision. Here's what they look like now. Not really much of a change. Still looking at 100% chance. The only thing that you want to focus on is over here, how many basis points they're looking to cut. And that's what the question is going into tonight. It's not whether they're going to cut. Everyone's expecting the cut. It's by how much. The market's currently pricing in 100% probability of at least a 39 basis point cut. Now, typically they don't cut with all these fractionals, right? Typically on whole, it's going to be either a 25 basis point cut or a 50 basis point cut. So it's interesting because we're right here in the middle. We're expecting easing. The magnitude and the size of it is that question. The other side of the coin is going to be everything that Wheeler says. Notorious for talking down the Kiwi, notorious for job-owning currency markets. If he leaves the door open for further rate cuts, if he specifically continues to cite strength in the Kiwi as a major concern, which he's done in the past, that could really offer some, pretty dovish tone, which could really weigh on the Kiwi. And that's what the market will be reacting to. If you're looking to sell Kiwi because they're going to cut rates, that's the wrong reason to do it, because everyone's expecting that. It's new commentary, a new light is shed upon, oh, there's going to be much more cuts down the pipeline. Oh, there's concerns that this may sort of stoke the already heating up housing market. They're playing a delicate balance here. So devil's in the details. We'll keep you updated with those comments as they come across the wires, but as far as the cut is concerned, that's pretty much priced in. The only other thing I'll bring your attention to is Credit Suisse overnight swaps, which tells you a little bit of a different flavor because that'll tend to highlight what the expectations are moving forward. Again, here's what they look like last night, and here's what they look like now, unchanged. Expectations for tonight starting to rise a little more. So probability of 112% suggests that it's a 100% chance of a 25 basis point cut and a 12% chance for a 50 basis point cut. That's how you want to read that. And again, the 12-month expectation still expecting 67 basis points in additional cuts. So you can see that the market's already super dovish on the RBNZ. That being said, here's what price action's doing. So I sat all night staring at this chart. You guys know we talked about the Kiwi dollar last week and even yesterday, kind of scratching my head with, where this thing is on a daily chart. We were working with this channel formation for a while. We sailed in, we sailed out, kind of adjusted the slope a little bit yesterday. And basically, there was a newly identified slope that highlighted near-term resistance at the monthly open. We blasted through that. I didn't see this coming. At the end of the day, the topside resistance levels that we kind of highlighted for areas of which we would start to look for some resistance, some kickback, the market barely paused. I mean, yesterday as I was publishing this, literally as I clicked published, this thing just rocketed right through that high. It blasted right through. That's what this is. Took out the monthly open and stretched right into the hourly reversal. Now you got some kickback in that in early European trade right ahead of the open of London. But here we are breaking through even this region. I'm not willing to chase this up here. And I was just kicking back some conversations with Jamie earlier today. We both are under the mindset this could still be just a run on the stops. Everyone's bearish, everyone's dovish, RBNZ is going to cut. And if that's the case, well, logic dictates that the Kiwi should go down, right? Wrong, because the market's already there. So as far as Kiwi dollar is concerned, look, I really don't want to touch this until we get into the interest rate decision. I still would be interested in possibly fading an exhaustion high. So if Wheeler comes out and he says there's room for further interest rate cuts, I'm sure he's going to say something about the Kiwi, but if he does really cite it as a major concern, something that they're watching and something that they're ready to act on, this Kiwi strength, I'd be looking for a rip higher, actually, to possibly fade the move. Possible areas of exhaustion, again, I wouldn't take this ahead of the release, but heading into the release are your high day close and the March low day close. That comes in at 72.91 and 72.96, this region right here. And then the actual stretch high from July comes in at 73.25. Okay, I wanted to leave this on just to show you where we were yesterday and why this region, which we highlighted, still offered some guidance. And that's one thing that this is basically just kind of a lesson that we can walk through, is that even when we have, even if the slope doesn't last long, right? And I even noted yesterday, I'm not really sure, it's too soon to tell if we can rely on this slope. It still offered clear guidance because the near-term resistance confluence, 100% extension off the low, and basic trendline resistance, but also the upper median line parallel turned out to be. As soon as that broke, this thing accelerated, and it was on an accompanied break above 70 in momentum. When it broke, Ruth, this is the same example. What happened? We missed the initial break. What happened? When it came back, it found support just ahead, of that same region. Further conviction that there was a, valid break. So on a near-term pullback, you'd look for support right at the former hourly reversal. By the way, the hourly reversal just is derived by literally looking at the last major high. The reversal close of that hour was right here. That should offer some near-term support if this break is legit for a final stretch into the high day close or the actual stretch high from July. Now, if this thing just continues to like rip face right into the release, honestly, just sit on the sidelines. I really wouldn't mess with this. It's kind of poised even from a momentum standpoint on the daily chart. You found support at 40 and you're holding 60. If you kind of break this to the upside, the momentum signature starts to look actually pretty constructive on that scenario. So just want to highlight everyone. This is pretty big here for the Kiwi, and we want to see how today's reaction pans out. But at this point, I'm still under the mindset that this could be kind of just a run on the stops, a quick washout of the weak hands holding short exposure on Kiwi. Any questions on this heading into the release tonight? Let me check one thing real quick while we're here. Okay, I don't want to get too granular, but just to show you how much stuff is lining up here. This is 75, this is 90, a little under 20 pips. That's tight. Okay, just focus on this key region here. This is pretty big. High day close for the year. Questions on Kiwi? And again, that release comes out right at the close of U.S. trade. Okay? Shortly after, 1700 Eastern time. Okay? And again, the market expectation is already a drop from 2.25% to 2%. Still relatively higher yielding, just for the record, central bank than most of the global central banks right now, but still taking this into record lows here. All right, next up on the list from yesterday was euro dollar. Ripped. Really nice move. So here's what the euro looked like yesterday. Just a quick update. We've been following this one for a while. We started off the week basically at support. If you remember Sunday's update, we were saying, look, you know, we don't have the trigger for it yet on the Sunday open, but, you know, you're coming into a major support. This is the reversal day close. You also had basic median line support for the downtrend, and it confluenced dead on with basic lower median line parallel support of the uptrend. Add to that just some sugar on top. You had that 200-day moving average. So, in fact, on Monday or on Tuesday, rather, I guess you got another spike into that key support before ripping higher. So here's where we are now. Well, first, before we move to the 30-minute, the daily chart is compromising some major levels right here. You have the monthly open, okay, 111.70. You have that swing high from last month on the 14th, which was also, I'm sorry, that wasn't the opening range high. I'm going to get rid of that text. Sorry about that. And you also have that 50 line for the current descending structure. And you've kind of broken through all of that just now. So, if we close at these levels above 111.65, that would really keep the immediate focus higher. I like how momentum reacted at the former resistance trigger, which broke last month, now offering some support. The real sort of barrier or hurdle that we would need to see is a break above 60. That would be the first time we broke 60, essentially since the peak we made earlier this year. And that would certainly validate a continuation higher. First major price hurdle is still that same region we reversed off of earlier this month. 100% extension off the low, 618 retracement off the Brexit decline, okay? And you still have the 100-day moving average right in between that region, 112.26 and to 112.30. It's exactly where we peaked out as momentum peaked out at 60 back early in the month. Very similar scenario, kind of eyeing down the euro on this advance. Okay, a break higher looking for this region here, 1280, let's call it, 1275. Nice confluence here again of some median lines off the highs. Now, on the 30-minute chart, here's what this puppy looks like. okay? And here's what we looked like last night. So that break above basic trendline resistance really was a little contentious, which is why I had the kind of breakout level at 111.13 into 111.17. That break finally happened and cleared out last night as we were publishing this. Shifts the focus higher. We came right into those median line parallels that we were talking about. We got a little kickback off that, the break above the monthly open, and here we are at confluence resistance. By the way, guys, just a quick note. There was a typo last night in this 111.19. That shouldn't be 111.19. That should be 111.90.89. So I hope you guys kind of picked that up. No one got threw off. That was this spot right here. 111.19 doesn't make any sense. But in any event, if you didn't catch that, great. If you did, well, there's the amendment there. But you're now at a near-term resistance confluence, the same 50 line of the current operative ascending structure, and a basic 764 retracement off the decline. Momentum is way overbought. Okay, so by no means is this a good time to get long, but it also actually gives me a nice, good conviction that we are on the right track, still holding this slope. Here is the open of the week. Again, quick dribble below, saw a quick recovery, and the breakout really validates the upside bias. So now we're going to stay constructive, as I noted yesterday, while above this region here, which is 110.90, let's call it, this confluence. And then a break below the weekly open, 110.76, would be needed to shift focus lower. So as long as we hold this support region, we're looking higher. And again, 112.26, 112.30, key resistance, followed by that barrier up there near 112.70. So still looking to buy pullbacks. You might see a little bit of a pullback into the U.S. Open as the dollar kind of exhausts a little bit here, but broadly speaking, looking higher in the euro. Not bad. Any questions on euro dollar before we move off? Where does that fork start in euro dollar in the 30-minute? So this one, Eileen, starts right off. This is the Brexit low, right? Yeah, 624. This is the Brexit low. The high that you made on July 5th and the subsequent low that you made on the 24th of July. And these are just some parallels of the same slope. But even every subsequent parallel that you add, it's just seen so many clean pivots, right? So even this slope right here, which is what I'm really would be targeting on a breakout, converges on that 112.30 barrier. You're bringing to this is an hourly chart actually, so here's what it looks like on the 30. Good to see the charts zoomed out more. Yeah, guys, if you ever need to see a little bit more of a broader spectrum of what the formation we're looking at, just feel free to ask. I'll be more than happy to kind of give you a zoom out for sure. And as always, remember, you can always click on that camera button in the top right-hand corner, guys, to take a screenshot of any of the charts that you see presented. Okay, that is euro dollar ripping to new weekly highs. Finally, nice to see this thing give us that turn after a real quiet start to the week here. Again, objective, Ruth, another example, weekly opening range. Here's your weekly open. You set a high, you test a low. When the weekly opening range takes place above key support or structural support, that even adds further conviction to it. So you saw that we came into support, tested it again yesterday, tested it again in overnight trade. Boom. Once we broke the highs, what did we do? Came back, tested the opening range high support. It held. Break of new highs keeps the focus higher. Now again, exhaustion near term, you're putting in some near-term divergence, so it could get some weakness, but broadly speaking, you want to stay constructive above the weekly range high. Adam says, finally some movement. Cheers, mate. Yeah, right? Gotta love it. And remember, and this is something we always talk about, times of increased contraction and volatility typically precede major times of extreme volatility. So just as everyone's starting to get into the lull and oh my God, things are so quiet, that's when you want to be on the lookout and really do your analysis, because you can bet something's gonna change soon. Ruth says, okay, thanks. More than welcome, Ruth. All right, so that is euro dollar. Moving right along to Aussie, another one that kind of ripped face last night as well. Now checking near-term structural resistance. Here's what we looked like last night on the charts for Aussie dollar. And for me, again, I was surprised to see this thing just continue to rip higher. I was looking for a pullback into the median line to get long. Our bullish invalidation level got raised to the weekly open. Again, we'll raise that now. I'll show you in a second. But I was looking for some sort of pullback here or here to try to get long. This thing didn't even get an opportunity, just ripped face. So we took out the high day close. We're now testing the upper median line parallel. We got another level at 77.65, which is a soft target to the upside for Aussie. Here's what it looks like on the 30-minute. Okay, so super clean. It's been super clean for quite some time now, but there are the levels. Really not much for me to say. There wasn't much opportunity to get in once you finally made that break above that upper parallel. The entry here I think would have been sort of perfect because you had so many clean pivots off that resistance, 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 breakout, support, support, support. Would have been a really nice sort of bounce to take against that low. Long story short, market will take, and market sometimes won't offer a new opportunity, except here we are at resistance. Would I take a short? It's a gutsy, gutsy move. I don't know if I could advocate taking that because of what's happening on the daily chart. So on the daily chart, no one can deny that this formation, you guys have all seen this before, has been one of the more fruitful ones on the broader spectrum of dollar crosses. I mean, it called the yearly high. It called the May low, literally to the pip. A little messy on the highs here for the last couple of months, but broadly called those turns at well. Now we're breaking through it again. Okay, momentum's above 60. And we just cleared the high day close for the year. So very hesitant, even from a scalping intraday standpoint, to try to short this and try to get cute with the pullback. I'd really need to see a much more profound turn in momentum. That being said, for those of you who do have the nerves of steel, you're at structural resistance right now. It's testing a near-term resistance. Okay. If we saw a little bit more of a pronounced turnover in near-term momentum, taking us back below 70, you might get a nice little pullback. Again, I would only be looking for initial targets at the 50 line. But, it's a ripperoo. And the basis of it is the daily chart is breaking into uncharted territory here. Above this region, like I said, I have a soft target at 77.65. But a break above that, I mean, you have nothing until the yearly high, which comes in at 78.35, and then a 1618 off the low, way up here at 78.66. All right. If you're holding longs on this, this is an area of which I'd start to take a little bit of exposure off the table and bring your stops up. Basically, I'd bring the stops up to the lows that you made last night in Asia. As long as you hold those lows, I wouldn't really be too worried if you're holding long exposure from beyond this region. But a good area of which you might want to start shaving some off if you're holding longs here for Aussie. Questions on Aussie dollar? You pretty much spent on Aussie data for the rest of the week. Well, I just show you here, I guess this is the economic docket for the Aussie dollar. You're pretty much spent for the rest of the week. Next week, you do get those employment numbers, which have been a little bit more of market moving as of late as well. So we'll get that next week on the 17th. But look for dollar price action to really drive Aussie from here. How do you think the Kiwi fundies will affect Aussie? Excuse me. I don't really want to associate them like that necessarily. If you're looking for that kind of reaction, Eileen, I know we're kind of out of Aussie Key from the swing side of things, but I think the near-term levels are still not all that ugly. Here's what Aussie Kiwi, what I was looking at for the daily chart. That, stretch we made came right into the median line off the lows that we looked at yesterday. Okay, and again, that long-term slope of influence for Aussie Kiwi, that held on a closed basis, in fact, almost to the tick. Look at that. Right? So you can't ignore these things. They're amazing when you see them actually in play, even after all these years. So I think it was a prudent move to kind of jump out of that trade that we were in on the swing side of things. You're now coming back and testing the yearly open as support. So I would be looking on a cross trade like this. I wouldn't necessarily look to play Aussie dollar in and of itself, Eileen, on the RBNZ release. If you want to play how the Aussie will correspond, Aussie Kiwi would be a nice play. If Kiwi sells off, with some real fervor, a long Aussie Kiwi play I think would be a nice scalp, looking for another attempt at least for a break above that, long-standing multi-year slope. Does that make sense? The major concern that you're seeing with these economies, both Australia and New Zealand, guys, is the effect, you don't hear it discussed too often, is the specific effect that the whole concern with China is going to have on the region. Remember that those are their bigger trading partners. So RBA is expected to cut more. In fact, if we take a quick look at the world interest rate probabilities for Australia, we can bring that up in just a jiffy here. Okay, here's what the RBA expectations are. They're not expected to cut any time in recent months or in upcoming months, but certainly heading into December and February of next year, you start to pop right back into a higher likelihood for additional cuts. So it's like, which one's ready to cut further? The RBNZ has more room to cut. RBA a little bit tighter on the end. They're already at 1.5. So I guess that's how I would do sort of a macro cross look at both of those. But Aussie Kiwi still looks like an interesting play if in fact you do see a Kiwi sell-off tonight. In fact, let me rework these levels for you real quick. And this is real near term, but I just want to see what it looks like. It's messy, but giving us some guidance here. In general, you've set a really basic and clearly ascertainable weekly opening range. Here's your weekly opening. It's offered support already in the last couple of sessions, so I'd be looking for a basic break of that range. But broadly speaking, I'm still interested in long exposure on Aussie Kiwi. Still treating this as like a near-term correction. Eileen, does that make sense? Says, okay, sounds right. Maybe the pair makes sense, thanks. Yeah, a little bit more to me, I think, than trying to play Aussie dollar in and of itself on the RBNZ. All right, next up is pound yen. Here's what pound yen looks like. I just wanted to kind of touch base on this last night. You're still sitting at the same support structure that we talked about yesterday in the webinar. And I just wanted to highlight there's really no change. The specifics of it, we're looking for an exhaustion low. I'm not looking to short pound yen at these levels, at fresh lows, but you can tell that the decline is coming into some major key support, and we've talked about these levels before. This is a long-standing trendline support coming off the 2011 lows. It caught the lows, broadly speaking, last month, and it coincides with basic channel support a little bit lower down from where we are right now. So with the yen kind of overly examined by everyone, it's so, the yen is just making a lot of headlines these days with where it's at. If you see an exhaustion stretch low, this is a yen cross I'd be interested in. Much wider ATR, if you're newer to the strategy, might not be the best thing to mess with. But for those of you who've been with me for a while doing this, it's a much bigger range, right? So if you get that stretch low on sort of an exhaustion trade, I think it might be a decent trade to try to fade for the yen crosses. Here's again what it looks like on the 30-minute. So there's that long-standing trend line, and there's basic channel support for even that near-term decline, which has been pretty accurate, calling the lows, calling the highs, nice pivot at the median lines, pivot, pivot, pivot on the 50, and again, the lower parallels come in right at those levels. 130.26, 130.50, area of interest. Okay, so no plays necessarily on this yet. Even on the near term, I really wouldn't just mess with it here. I'd be looking for a resolution and a real strong sort of break, either a stretch into this region or you would need to see a break above 134.19, basically the weekly open high, to get bullish on this. Which indicator can we use to spot the right entry? Amir, I'm not really a big fan of relying too heavily on any indicators per se. Price action is your biggest tell. Okay, I like to look at momentum just to get an idea of what near-term momentum is doing. But Amir, all indicators, all oscillators are backwards looking, whether it's stochastics, RSI, MACD, whatever you're thinking of. So I would just preface this by saying, you know, you want to just be cautious about putting too much reliance on it. Adam says the human indicator. Well, that's a different indicator, Adam. If you're talking about sentiment, yeah, I actually look for broad consensus on trades that. Let me just tell you back. I like to fade certain people on whether it's on Twitter or certain bank research when they have a lot of conviction on a certain trade. Sometimes that in and of itself is a sentiment indicator that, you know what, sort of the trade's exhausted. Might be a good time to actually get in the way of this. Remember, cautiously with the market, boldly against. That's the name of the game. Whenever you're with the consensus, what the markets do, that's when you want to tiptoe around it, be cautious. But when there's exhaustion and there's technical conviction behind it, and you're seeing sentiment at an extreme, that's when you go boldly against. So quick note there. But Amir, to get back to your question, I like to use a near-term RSI signature indicator just as a tell. So let me just bring up my trading platform here. Michael, thanks for that. Graham says taxi drivers. That's actually an interesting tidbit as well. Yeah, when you see people who have known nothing about the markets bringing up a specific topic, that's when the market is diluted. Okay, it's saturated with that sentiment. A lot of funny comments here, guys. Love the humor in the morning indicator. I have a question, not out of intent to copy or anything, but out of curiosity to the realisticness of trade sizes for a regular average retail trader compared to a wizard. This is from Michael saying, but the trade size is like 25K realistic. Like what would you trade? Just seems hella low. I wouldn't stress the trade size. It's percentage of account, Mike. You never want to risk more than 5% on any single trade. So whatever that leaves you with, as far as your risk tolerance, that's what your trade size needs to be. Okay? It's thinking percentages, guys. It's always about percentage, Mike. So if you're trading with 100 grand, 150, 200 grand, yeah, 25K position is not that big a deal. If you're trading with more size than that, yeah, I lever up. Here's the thing. It's all about the strategy that you're working with, Mike. When we're working with a real near-term trading strategy, you know, I will tend to obviously take a much more aggressive stance on leverage because my risk is well-defined. I'm willing to take a 15, 30, 35 pip stop. That's my limit. That's what I'm going to I have a well-defined risk tolerance on that. And it also gives me a lot more flexibility on being able to fade out of a position. So if I like the core position that I've entered, a lot of times I'll chip a little bit off, chip a little bit off, chip a little bit off. Now when the market's coming into resistance, I still like the directional bias, but I'm not going to, it was a scalp, right? So the stop loss will come to break even or even better, and I'll let it play out. If it gets stopped out at break even or better, so be it. But I leave myself that margin. But think about it in terms of risk on the account and the percentage of risk that you're willing to take. And everyone's risk tolerant is going to be completely different. So I can't really give you, a straight up answer of what you personally should be doing, Mike. Does that help? He says, I think I realize what my problem is. I'm great banging out the event trades and situational trades, but I love to trade like I got to be in something kind of almost deal. Oof. So I've been just rocking my scalp size, trade expecting and range every time I want to trade. I think what I need to realize is to identify appropriate times to apply different size scales. Absolutely, Mike. And I can't tell you how important it is. You never want to just go onto your platform with a carte blanche trade strategy and just a carte blanche. This is my leverage on every trade. Absolutely. You want to use leverage to your benefit. There are some trades where you want to lever up, and there are some trades where you want to be a little bit more cautious and tiptoe. Literally, trade 1/4, sometimes 1/5 of what my normal trade size is. If I don't have that much conviction on the position, or there's major event risk that I'm coming into, you definitely want to vary your trade sizes. You don't want to be static with this kind of stuff. Mike says, yeah, that makes sense. All right, Mike, great questions here. I hope that helps, but a great topic I think we should definitely touch base on every now and then, because this need of not just yours, it's a very, very common thing. I used to have the same exact problem, to always want to be in a trade. It could be, could cause massacres in near-term trading. I've seen it from both sides of the trade desk. So hope that offers some help on that front. All right, so moving right along. Pound yen, watch for an exhaustion low. You're testing near-term support right now, but if you make it through that parallel, and specifically the weekly open, might be onto something. Aside from that, still looking for a drop lower to possibly get long here. Dollar CAD, I just wanted to touch base on. Obviously, this thing made a massive move. I just want to show you what the daily chart looks like, just to show you where we are. We're basically at a near-term parallel right here. We just tagged it. It's the same slope that caught the highs. It's the same slope for this formation. This is a modified shift, or just a modified slope. Just basically takes the basic trendline support and extends that out. So momentum's at support. Another reason, Eileen, I was telling you, it maybe is right? I don't really have all that much guts to start jumping on the dollar short from here, because you're coming into support on a couple of different trades. Aussie dollars coming into resistance. The only thing that doesn't really look like it's at an immediate support barrier is the dollar index. But again, you don't want to take that across all the pairs as a staple. That being said, here's what the near-term chart looks like. I know this is messy. It might look a little messy at home. Let me zoom out, put this in hourly. It might be a little clearer. But basically, this is the slope. Again, this is just a basic modified slope as well, using that basic trendline resistance. And there's the slope that we talked about on the daily chart, catching the low almost to the pip, which is exactly almost where last week's low was. Yes, we're in oversold condition, so this thing does have the propensity, it could still plow right through. That being said, I'm looking for a possible rebound from here. Areas of interest for the top side would be the monthly open and 130.40 as initial resistance for dollar CAD. Eileen says, me too. Used to put on massive numbers of trades in the past. Many thanks to you. Cheers, Eileen. Okay, one more, he says, from Michael Martin says, I noticed the other day the Kiwi RSI was at RSI, broke to 40, was at 70, broke to 40 with a 70 pip range. and then a day or so later. Okay, so basically what he's saying, Mike's saying, so he's seen RSI rip from 70 to 30 or to 40 on some days where there's a 70 pip range, and sometimes it does that same move when there's only a 30 pip range. Does this diminishing correlation in general imply that trend change possibility, or is it just shooting at stars looking for some correlation? But then after the fact, this intense bullishness validates the idea. So that's an interesting observation, Mike. Here's the thing. I don't want you to start looking into things and seeing things that aren't there. It could be, in fact, diminishing correlation or not diminishing correlation. For me, it's more the market's thinning out. There's less interest. Therefore, fewer players will actually shift the market in a momentum standpoint than necessarily is needed in price movement. Does that make sense, Mike? Bottom line is not something I would stress. Not something I stress. RSI is simply a measure of the strength of the move, not necessarily the size of the move. Okay? Remember, I can go back and show you dollar yen charts on a daily chart where dollar yen was overbought for months, but it was a slow grind higher. You know, if we took that basis on it, we would have been in big trouble, because it kept on going for months and months and months. So he says, very good notes taken. Right on. All right. So I hope that helps on dollar CAD. Looking for near-term support. Could get a break higher here, but a move lower, you're looking for 129.53 and that lower parallel for this near-term operative structure on dollar CAD. Real quick look at crude gold. Here's what gold is doing first. Again, we highlighted 1355. We're there now. We looked at that yesterday. Near-term resistance, long-term trendline resistance off the 2011 record highs. Here we are yet again. Very familiar territory. Wouldn't put it past this thing to spike into the upper parallel, but basically if we break this, looking for continuation of the broader uptrend. Remember, we've been treating this whole pullback off of this region more as corrective, as the broader trend still remains weighted to the upside. It's just that we're at a pretty big resistance region. And if I bring this into a weekly chart, you'll see it a little bit easier. Boom. There's your record all-time high, 2011 highs, 2012 highs. Fake out with an outside day or an outside week reversal at the highs. Here we are again trying to plow through this long-term trend. Crude looks like this. Kind of a dilly-dally. Remember yesterday we talked about 43.94? That hasn't changed. I'm still looking for a stretch higher here before it turns over. You still have that median line, the 50 line, which converges on a basic 38.2, and then this would sort of be still your key resistance region. A break sub the monthly open, basically at 41.45 here, would be needed to kind of validate the reversal and continuation lower in this near-term pullback for crude. Don't forget, you also do get crude oil inventories from the Department of Energy today at 10:30. So about an hour after we close out the webinar, look for those inventories to possibly cause some volatility, not only in crude, but also in dollar CAD, especially since we're at support. All right, and that pretty much covers everything I had. Really quick, I just wanted to bring up this chart. I have nothing to do with it right now, but it's something worth watching. So here's dollar Swiss on the daily. Again, the slope that was acting so nice for a while, kind of, you know, I don't know what to do with this right now, but not on the daily chart. The 30-minute is really what gives me a little bit of an idea. Looks like we have just a near-term breakdown of an upside slope off the lows. Again, this is the monthly lows for July. Held pretty well. Gave us some really nice pivots off those MLs, and here we are, break to the downside. So on an initial rebound, I would look for some resistance right here if the breakdown is legit, and that kind of matches very well with Euro strength. So I'd be looking for a kickback, possibly the 97.90, basically the 98 handles where I'd want to see this thing hold for a possible move lower. Downside targets in such a scenario, just tack on a quick retracement, looks like this, and it basically highlights that same region at 97.08, 97.13. Mike says, I was looking at Euro Kiwi. What do you think? You know what? I don't think. I haven't seen Euro Kiwi. Let's take a look. Here's your weekly open. Here's your monthly open. Wow. So this can be interpreted a couple of different ways. He says, I liked it last night. Look at the monthly or the weekly. This could be interpreted in a couple of different ways. Let's see what the weekly looks like. Okay, so right off the bat on the weekly, you do have like a trigger here, which something I wouldn't really operate until I see compromise. And this is, Amir, one of the ways I like to use indicators, just a graphical representation of a shift in momentum. This is the same thing that we do on near-term charts. Basic trendline resistance in the oscillator can oftentimes just tell you when there's a shift. So if we see an upside break here with a break above resistance, that's when I would start to look for a pullback to get long. Until that happens, you're still kind of on a downward trajectory in also momentum. Let me bring it back to the daily. This is sort of what we were looking at a couple of weeks ago. And we were looking for this rally here to find resistance. Once this broke, I kind of stopped looking at this because, you know, our thesis was wrong. It kind of broke the resistance. Well, we doubled back and closed the month below. Here was the opening range high for the month, right at that same trend line. Okay, and this right now looks like it's breaking the monthly opening range lows. I really wouldn't touch this until the close of the day, and if we close sub or south of 54.36, that would actually put a pretty, excuse me, that would actually put a pretty bearish tone on this, at least for the near term. He says, I agree, bearish below the 618. That 618 was my level. Then I woke up and my thesis got murdered. Yeah. Keep your eye on that. And let me just do one other thing here for you real quick. I just want to see what the near term sort of slope looks like. Not the cleanest. But even as a reference point level, do you see this? This is the monthly open. So the monthly open support, monthly open support, monthly open support, monthly open support. On this rally here, we want to see monthly open resistance, and that would suggest, again, to keep the focus moving lower. Even on our super near term, just off the weekly highs here. Looks like you completed 100 off the high. Okay, so again, this is kind of what I would be looking at near term. If this is just a correction move, that's exactly what you'd want to see. Two equal legs off the high, A, B, C type deal, done deal, right? Guess where the 618 extension comes from, which we offered support at earlier in the week at the monthly open. So basically, that's your barrier of invalidation for the short side. The weekly open break would sort of give you an upside bias straight up. And that also converges basically on basic near-term slope resistance. So quick outlook here. I don't really have anything too long-term on this kind of figured for you, Mike, but I'll take a look at it if you'd like. Interesting pair. Not my favorite pair heading necessarily into RBNZ rather, although I must say, if Kiwi sells off, this might be a ripperoo, like serious upside potential, because I like the Euro long idea, right? So just on that basis, if Kiwi really sells off, I think the upside potential here is phenomenal. It's just that one thing you got to keep in mind is that today, Kiwi's the strongest mover. So not surprised to see Euro Kiwi moving lower, right? But if Kiwi sells off, this could be this could just rip face. Sort of be a really nice washout. Could be the same scenario looking at Kiwi dollar. Could be a fake out right into the event. Everyone's buying Kiwi, right? Or closing out those short positions, which again offer a market volatility to the upside. But seem close to your Aussie Kiwi chart, I thought, breaking that huge level at the monthly open. Yeah, remember, anytime we gauge a monthly open break, it needs to be on a closed basis. Okay, so I'm not going to just look for a stretch through the monthly open and call that a break. Kind of needs to close the day above that level to give it more meaning. All right. Mike, great questions here today. Guys, thanks for everyone's attendance. We'll wrap it up here. Don't forget, Jamie's on tap later today at 1 p.m. Eastern with a midweek strategy webinar to go over some of the longer-term horizons and some of the trades that we've been taking on the swing side of things. I will be back tomorrow morning to wrap up the week for a final intraday webinar at 8:30 Eastern. Until then, best of luck trading. Watch out for that RBNZ after the close today in New York. Cheers.